The Dow closed up nearly 1.5% today, but still ended the week in the red, marking 7 weeks of losses, and that's the longest stretch since 2001. And the tech sector is especially volatile. Since the end of last year, the S&P 500 has lost nearly 18%, wiping out $7 trillion in value.
Already joining us now to help us make sense of all this is Dr. Ryan Decker. He's an assistant professor of economics at North Central College. Thanks for being with us.
Thanks for having me.
All righty, turbulence is expected. The market goes up, the market goes down. At what point do we get concerned, or should we be?
Well, investors don't like uncertainty, and we have a lot of uncertainty in the markets right now. But some perspective matters. While we might be down around 20% from all-time highs, the stock market is still up over 100% since 2015. So while this is all out of individual investors' control, focus on what you do have control over, like the asset allocation and how much exposure you do have to the equity markets, as well as how much you're actually saving for big purchases like retirement.
Let's talk a little bit about these gasoline prices. I guess yesterday hit an all-time high. What's the government doing to ease that, or can it be eased right now?
It looks like it can't really be eased too much right now. While President Biden has put a pause on some new leases, that's unlikely to impact present-day gas prices, but it will put some upward pressure on future gas prices. Now, the United States is effectively a net exporter of oil, but we still import and export to smooth out consumption patterns. But with the ongoing war and uncertainty, we're going to see some elevated gas prices moving forward into the summer.
But at what point do the stilts that hold up the American economy start to waver a little bit? You've got high inflation, you've got a record high real estate market, you've got the stock market stumbling a little bit. Everybody worries when the bubble pops.
Yeah, that's a valid question. But, nobody can predict the future. So you need to protect yourself. You need to protect your assets with rising rates moving forward as well. If you're thinking about buying a house, you're going to be having a higher interest rate on that loan. If you're thinking about selling a house, well, there still seems to be some demand for homes. But again, control what you can control. Right? You can control the amount of risk that you take and how much you're saving and your budgets moving forward. So I'd focus on what you can control and realize that a lot of this is out of an individual's control.
And here's something that we really can't control, and fuel has a lot to do with that. Airline prices. They're ridiculous. They're through the roof. I mean, you go on there and you're like, they've mostly doubled since last year. Will it ease up? Do you see that happening? And it seems like there should be somebody regulating this.
Well, as long as we still have elevated and continuing to increase gasoline prices, it's going to put some continued upward pressure on everything that's dependent on gasoline, like air travel, and with some pilot shortages as well. And as we start to travel a lot in the summer, there's going to be increased demand for tickets as well. So, we're probably going to be seeing high prices in a lot of goods throughout our country and things that we're buying this summer moving forward.
What about the job market? Because all of these things are just so interconnected, and we've seen, just a thirst for workers out there, some rising wages. Do you anticipate that any of these other troubling signs in the economy could come back to bite the job market?
There's potential for that. It's quite clear, regardless of what industry you're in, that employers are really desperate for new employees. And until employees are actively wanting to get into the workforce, we're going to see, a depressed labor market. So, will rising rates put downward pressure on hiring moving forward as businesses struggle to borrow money? We'll see. As gasoline prices high and the cost of goods continue to increase, is it going to push more people into the labor markets to afford the basic necessities? That could also be the case. So there's definitely some uncertainty in the market.
Do you see inflation getting worse before it gets better?
It's tough to say. Now, the Fed has been very active and very vocal in saying that they're going to bring down and stop the speed up of inflation. But, recent inflation metrics still show increased inflation. Now, with the past few months have shown nearly record high inflation given the past, few decades. So, will that continue to increase? We do have this, the oil prices. We do have supply constraints throughout the world given COVID shutdowns abroad. So there's a lot of upward pressure on prices, which goes into the inflation metrics. Now, the Fed only has say in really interest rates and the money supply, but there's all these other factors that are pushing prices up. So it's a bit difficult to discern what exactly is pushing prices up, even when the Fed is increasing rates to help bring prices down.
Okay, Ryan Decker from North Central College, we appreciate your time this evening.
Thank you. Have a good night.
You too.